In this video, I'm going to show you exactly how to turn $100 to $1,000. And this is going to be a trading guide that works every single time that I do for myself and that I also do for my community. See, the thing that traders don't understand is you can have the most shittiest strategy ever, but if you have a really good risk management system along with really good tools that I will be sharing with you, anything is possible when it comes to growing a $100 account. Once again, I go by Solo. If you don't know who I am a guy that turned $4,000 to $40,000 on my YouTube live streams, and I consistently do that even in my Trade with Solo community. And I'm going to be sharing to you guys finally the trading guide that I follow every single time. Now, if you are a trader and you are looking to trade live with me and grow a small account, I'm only selecting 20 traders to take this chance with me to take a $500 or even a $100 account to about $10,000 or $5,000 all live, but I'm only selecting a few. So I will be sharing that to you towards the end of this video, so make sure you stick all the way through. So what you'll learn in this video is the exact entry model I use. That's number one. The risk plus reward strategy that I use to scale and scalp my accounts. Also my personal calculator that I use to flip accounts. And also I'm gonna be giving you other tools that I use to help me get a prediction of where the market will be for this week to kind of avoid any extra noise. And then also how to avoid over trading and win small. That is the key here. So the reason why most traders blow their account is very simple. Over trading, over leveraging, no risk management, which is the key to scaling and growing any account. Random trades. I'm sure I always ask this to a lot of people, and all the time I say, what made you get in that trade? And if you have no logical explanation, you just random trade. And then also no consistency, which means you have no actual entry system or entry model at all. So we're going to be fixing all of this today. The entry model that changes everything. Step-by-step breakdown. So number one is you want to identify the impulsive move when the market structure breaks. Very simple. Second, you want to wait for a liquidity sweep or a fake out wick, which can give you that anticipation of where to draw your actual levels. And then number three, you pull your fibs out and you target the 50 or the 618. And then inside that, you locate an order block or a mitigation zone. And then next, you wait for engulfing candle or wick rejections. And then 6, you enter with an RR at least 1 to 2. Okay, so let me give you a live example of what this looks like in a live market, trading something like US oil, which is one of my favorites. So if you look left, I marked out all of the actual lower highs, which we had one right here, we had one here, and we had one here. Now, the reason for these lower highs is simply because I'm looking for structure to actually break out of any of these lower highs. Now, if market decides to break a previous lower high, that identifies the beginning of the trend, which is known as the range, which would be this move right here. And we call this the A point because A is the first letter of the alphabet, which means A is the very first move of a trend. After we establish that, I then now start to look at that trend that had occurred. Meaning, if we're looking at price running right now, which is currently doing, and we need to now identify the structure off of this range. So what I am going to do is remove these right here. And now we're going to look for all of the structural lows that's been formed. We had a low here. We had a low here. We also had a low here. Now, the moment that market decides to break this low, we now can identify the end of the range, which would be what we call a B point because it's the second letter of the alphabet. So now I am looking for market to form structure off of this A and this B point. The reason why this matters is because this helps you identify what to actually mark out and what to actually pay attention to when it comes to identifying the charts. What I mean is, if you're one of those traders that's confused on what level or what range or what trend to pay attention to, you can use this A and B point and it can literally eliminate all the extra noise, all the extra fluff, and you can get straight to just analyzing what is important right now. This is where I'd like to take my Fibonacci. So if you ever ask yourself, how do you draw the Fibonacci's or where do you draw it from? You need to first identify that A and B point by using market structure, and that's it. So we're going to map out A and B. The reason why I use the Fibonacci is very simple because this gives me the most accurate order blocks, fair value gaps, POI levels, AOI levels, area of interest, anything where it comes to key levels or anything where it comes to structural levels. This helps me identify the most valid level. So if we're looking at the fibs, like I mentioned earlier, you pay attention to the 618 level and the 50% mark. That is literally your golden zone level of where you want market to tap into. So if we look closely, we see that market easily broke past this 50% Fibonacci mark. So that clearly shows and tells me that I'm only interested in any fair value gaps that's lining in there, any aggressive zones that's lying in there, any POI levels, any support resistance, any key levels, order blocks. I am looking on it to tap in to some of these levels. Market clearly tapped into our supply chain, our order block chain, our aggressive chain, our midpoint. And the moment it did that, we instantly seen a move that we identified earlier, which is the engulfing candles, which is here and here. That right there is the easiest simple entry model you will need to scale this account. Now, another tool that I also do use and that can help you guys really grow this account. This tool is called the tradingtools.io. This is actually something I've been using in the back end, and I actually decided to build it out within a time frame of showing you guys this so you can actually use this tool as well. One of the biggest tools that it has is one of many, but my favorite is the Market Lens AI. This is pretty much like a track reader that does a couple things. It gives you the fundamentals of news analysis, but most importantly, it also gets the data and analyze everything from news and analyze everything from the actual patterns of market structure. So if you look here, we're looking at oil right now. As of today, it's telling us that the market is bearish, currently sitting at 64.83. And then also, if we were to refresh and regenerate this, it will give us a prediction of where market could be heading within today, this week, and even next week. And like I said, it filters out all of this through most recent news and through upcoming news potentially, and also through structure itself. So this is a powerful tool right here. It gives you the idea structure. It also shows you something called pattern recognition scanner, which basically helps you identify if the market is going to create a double top, head and shoulders pattern, inverted head and shoulders, and so many more different price action patterns. But the most important thing that it does is it gives you the strength of how powerful that pattern is bound to happen. And on top of that, it even gives you target prices of where you can take TP1, TP2, and TP3. Here's where you have to really lock in the entry checklist, right? We have to identify in the impulsive move. Once we identify the impulsive move, we wait for it to break structure. And then we see liquidity sweeps or grabs previous highs or previous lows. That's the next checklist. And then we need to see that it pulls back to the 50 or the 618 mark. And then next to that, we need to either see it pulling to an order block or mitigation inside of the fib zones. That's confirmation for us to know that we can now start looking for our buys. And then the confirmation is look for wick rejections or engulfing candles. Haven't said this, but we're only trading the New York session. Only way to grow this $100 account effectively is trading the New York session. Now let's talk about the exit plan, because this is also essential. So we're not guessing anything. We're going to always make sure we're staying to a solid, consistent plan. So how we're looking for TPs is one. TP1 must always be at a 1 to 2. And I'm going to show you what I mean by that. But your TP1 has to at least, RR has to at least be a 1 to 2. If it's not, this is a trade you absolutely do not want to take. Now for TP2, fib extension tool, you can use that and scale it to the negative .27, which I talk about all the time, and negative .618. Meaning that if you get in the trade, you want to make sure that goes to TP1, and then the TP2 would be your either two levels of 618 or of the negative 27. Let me show you what this looks like in the actual live market so you can fully understand. So if you look at this trade right here, this is pretty much the trade we talked about earlier. I had already my fibs out. This red mark is my negative .27, and then this mark right here is my negative .618. Let's just say theoretically we ride TP1 to negative .27, or at least close to negative .27. As you see, when I said RR, this is this right here. So for those that don't know what this actually is, you can get this through TradingView. How you would do that is very simple. You come on the left-hand side, you see that you have a long position and short position. If you're buying it, you get your long position. If you're selling it, you get your short position. But the cool thing that this does is it gives you your RR. And the RR is super important because it tells you how much you're risking to gain reward. And like I said, the goal is to get it to at least 2.00. Anything above that, that is perfect. Your goal is to also make sure that it is 2.00 is at least TP1 or TP2, which is going to be that negative 27 or the negative 618. Do not go for anything lower than that, because the way we scale this account to $100 to $1,000 is we have to start reinsuring that we can at least double to lose half of what that double is. Meaning that if we put in $100, our goal is to make 300 and not just another 100. Okay. Total is what I mean. After identifying, your risk to reward, the strategy entry model, you got your exit model. Now we move on to the next step, which is the key to scaling an account consistently. So this is the most important part. And you do also get this in the tradingtools.io. And that's something that you guys can follow as well. So if you're working with a $100 to $200 account, you're going to risk $5 per trade. And then that's a 5%. Why? Because this is just going to build cushion for you. You just want to start getting good with it, warming up. And then next, $200 to $500 risk per trade can be $10, but you're still risking $5. And this is just all about staying consistent. And then $500 to $750, once your account gets there, you can scale it up now to $15 to $25, which is still could be anywhere from 5 to 7%. And now you're smart scaling. And then from there, once you get to 750 plus 1,000, you can even go from 25 to 30, and then now from 7 to 10%. Only with consistency though. Now we're going to say we got a $100 account. All right. And we're only going to be risking 10% per trade with a win rate of 50%, risk to reward at 1 to 2. Our sizing method, we're just going to say fixed percent because we're only going to be risking 10% consistently until we get to a certain amount. Now, one thing I like about this is I added this risk to ruin, meaning that what the percentage would be if you decide to go crazy. Right now it's like 0% because we're staying consistent and very minimum towards this. If we look down here and we see that we have 100 trades we're going to be taking total, we see that off of the first trade, obviously count will grow to $20 and it will scale and scale and scale and scale. And then we can see that within our 100 trades, we should be getting to just about that $1,000 mark. Where it gets really interested is we can start playing around with this. Now, let's say we wanted to do a 1, 2, 3. Okay. And then now let's say that we want to risk a little bit less. And then now let's say that we want to say our win rate is sitting at about a 40%. And I said this before, it really does not care about your actual win rate necessarily. It's really about how consistent you stay with risk. If you look at all of this, this is kind of like a metric of an average trader of where their account could go if they stay consistently doing this same exact method of risking 4% per trade and then locking in from 4%. And obviously you're not going to have all wins. You're going to have some losses and some wins. But overall, if you stay consistent with this with a 40% win rate, it will literally show you what that will look like at the end of your 100 trades. It will show basically from $100 with a 40% win rate. If you stay consistent, you're still looking at about $590 off of this account. So you do get more insights about your actual performance metrics, meaning like you can see the actual position sizing, risk factors. Now, that being said, 5 trading rules to stay alive and grow is you only trade during New York sessions. No setups equals no trades. If you do not see a setup, do not trade it. Journal every single win and journal every single loss. You can do that with the tradingtools.io to journal all your trades so you can at least have everything locked in as well. And then stick to trading 1 to 3 trades a day max. And then, of course, absolutely no revenge trading at all. I appreciate you for staying all the way through towards the end of this video. Like I had told you guys earlier, I'm only looking for 20 traders to handpick and actually help grow an account and really lock in with them. So if that's you and you really want to be one of those students, you can literally join our free Discord. That is down below. And when you tap into our free Discord, we're going to be doing all the announcements about how you can apply and lock in and get into our actual community overall. And hopefully I can help you and scale your account with you. Other than that, I appreciate you. Your boy Solo. I'm tapping out. See you guys in my next video. Peace.